Hello, Dave Knight here at Knight Capital Management. Thanks for watching. Thanks for being here. And today's topic is what makes a good trade? In other words, what, in my estimation, makes a really nice trade setup? And this is part of our top should ask questions to you. But anyway, what I want to get into this evening is talking about a couple really nice trade setups that happen, and I want to go in and I think trading the crude oil market, and this is just a freebie for you. You know I like to give these freebie tips out every so often. That's just the part of the person I am, the makeup that makes me the small account trader, the guy that's fighting for the little guy. I am you out there. I am fighting for you. That's my job, and my role in life is to fight for the little guy, because that's where I am. That's, I've traded in the big world, and I've traded in the medium-sized world, and I'm trading now in the small account world. And I believe in this march that I call my march to 2 million. That's 2 with a 2 million behind that. So I'm not talking about 2 million sheep or goats or anything. I'm talking about $2 million, in this case US dollars, since that's which country that I'm living in. But obviously I would rather have that be 2 million pounds, though. That makes more sense to me. I like the pound over the dollar. Screen here, and as I'm moving my hands around, I wanted to talk about how I look at it. Now you're going to see that I've got another little chart up on the side here on the far left hand side. What's that chart all about? That's the dollar index. A lot of crude oil traders and a lot of traders use the dollar index, and this is the obviously there's a lot more to it than just putting a dollar index chart up, but I'm not going to get in detail with it, but just so you know that it's part of the I guess in this case it's called the TCB crude oil product that we use, or taking care of business in crude oil. And yes, I know I have a sidetrack to this whole discussion, is that our room is opening up again coming in May, the first week of May. But this is a freebie to you, to let you take a look at kind of the trade setups that I look at, and the power that you can have inside this particular market. And what I like to do is concentrate on the 5-minute chart right now, and then we look at the 300 trade charts as well. Now when we set up our trading day, we determined prior to us, this is the afternoon movement. I need to move over here to the morning movement that we're looking at. And one of the key things that I like to look at, and you know that I like trading the crude oil inventory day. What does that mean? Crude oil inventory. What I mean by that, if you go to a website called Forex Factory, it's a free website. It pulls up, what's really cool is you can go in here and you can pull up the week's calendar. You can go and research and review some really neat stuff here. You can print your current view. And then if you just click this is going to show the current trading day that we went through. And obviously, if it's 8:30 in the morning, this is not going to be known, right? So this is in the evening. Obama's already spoke. The Beige Book's already come out, and the whole evening here. In fact, as I'm recording it, you can see it's 8:47 at night right now as I'm recording. So all this information is out. But on a crude oil inventory day, I think the most conservative play is to wait until the inventory number comes out and then make your trading decisions, because more times than not you could just take every Wednesday off, or work around so that you work one of your days off is Wednesday, hint hint, and trade the crude oil inventory day and find a lot of really good trades in your in this case there were 2 trades within our time frame I want to talk about today. And I want to show you 2 really cool setups. So the inventory number comes out, and it is now 10:30. Within 1 minute period of time, going back here to 10:30, we were trading here, this market right here, the 10:25 to 10:30 bar, pretty much for the whole. Actually, I guess if we look at the 1 minute chart, this will be a little bit easier to see here. Let's back up to that same time frame that I'm talking about. Let me pause here for a sec. Okay, now we're looking at the same information on a 1 minute chart right here. And you can notice at 10:29, see down here below, right down here you can see what time it is currently on my charts. 10:29, and then at 10:30 the report comes out. The initial reaction to this report is seconds. I mean, literally seconds. It might have been 5 seconds, 10 seconds, but it was very, very quickly. It moved down and then very quickly moved up here. And then from this point, all right, I had to take a phone call there, so excuse me. So anyway, okay, so we're sitting back here at the 10:30 mark, a couple seconds here. And then within a few seconds more, this market moves up here and makes this high being at this point in time 107.05. And then it backs off and actually produces a signal here at the 10:35 mark, but we'll get in. Actually, let me go back here. No, 10:35 goes into, I believe, let's go back to the 5-minute chart because I can't remember exactly. Let me get back to the right time frame. 1 second again, please. All right, so here is the same time period that I was talking about. Here's the 10:30 mark, right? Here's our dead zone in between the 50 bar and the 200 bar MA. And notice that it closes right here on top of this 50 bar. If you would look at this bar, it was the 5 minutes action on this particular bar between 10:31 to 10:35. It goes down, it comes all the way up, and then it closes right here. It basically comes up, looks really strong, and then it goes down. Then in the next 5 minutes stays inside, no action here. Here is an interesting bar here at the 10:45 mark. It comes out of the dead zone, and this physically is where our entry point comes in. And I'm going to show you this because the high here is 106.96, and our entry point comes in here at 106.98. Now today's particular trade situation, what we're looking at, let's back this off because it wasn't 2.79. Let me get into the right time. Oh, yes, that's right. 2.67. So today's ADR, our proprietary information ADR calculation, our 1R target today was 27 ticks, and our 2R target would have made 54 and so forth. So 1R, what you do is that's like 266, and 10% of it, or just move the decimal point over 1, and you get 27. So 27 here is the ADR, so 27 ticks. Now in the crude oil market, that translates out to $270. Now let's look at this same trade on the 300 trade chart here that we're going to be looking at this particular trade itself. So here is the 1040, 1043, 445. So notice that the high is printed right here at the 1042 mark at 106.96. And at 1045, what we see right here is that right after a 1045 mark, this is run at 106.98, bringing us in the market. And a 54 tick chart, 27, excuse me, let me back up here again. Oh, I apologize once again. That's what happens when you record at night. Everybody wants you, daddy, daddy, daddy. Oh, as a side, have you ever had one of your sons put a Lego up their nose? We had to go to the doctor's office the other day when my youngest son decided to put a Lego up his nose. So that was very interesting. Blood everywhere. Thank God my wife was home. I told my son, who's soon to be 6 this summer, that if he's going to pull these kind of stunts, he's not going to spend his summer here at the house. He's going to be going to daycare. So, oh, Daddy, I'll never do that again. Yeah, so we'll see. So let me go ahead and take some time here to mark the 1R and the 2R targets. So here's how we set up the trade here. We're entered at 106.98. Notice that we run our 1R target here at 107.25, but we do not, we are not able to run the double R target here, or 2R target. And when I mean R, I'm talking R means risk, as like Van Tharp talks about it in both of his books, Trade Your Way to Financial Freedom and Super Trader. This is how I determine my R. Every trader needs to determine their risk, and this would make a 2R target, or a 2-for-1 profit factor, if you want to look at it a different way. So our initial target is roughly shooting for 1R or 2R. In our trading room, we go over this in a lot more detail than I have with 15 minutes. I know 15 minutes seems like a long time until you sit down and trying to do this on a YouTube video. 15 minutes goes quite fast. So let's take, this was our long entry here. We came in at 106.98 and we exited the trade a little bit later, right through here, I believe, or through here at 107 and a quarter. One of these, yeah, I think it came in through here somewhere that we were exiting the trade at 107 and a quarter. We got within, I think it was 10 ticks of hitting the double R target today. So here's our long entry. Now I want to show you a really cool setup here. This is a VSA setup. This is called a thrust setup by, actually it's a Wyckoff setup, by the way. It just barely becomes one, but notice that the CCI line, and look at the volume ahead of this particular, notice that the volume here, and what I mean by volume, this is the volume lines all through here. Here's all your volume. Look at the volume highs, and then you get the spike highs through here. Here's your volume spikes, and here's your CCI coming in here at over 200 on the CCI line. And before this, you notice the CCI is like negative, negative, bam, positive, positive. Notice that a spike reversal bar comes on our charts, proprietary information here as well, signaling a short signal right here, a little underneath there. So if you're looking at a physical entry point, it would be 2 ticks underneath the low of this 5-minute bar if you really want to get technical, or we can look at another points. But let's just say that we were looking at it at 107.13 would determine the short side. But let's go take a look at the 300 trade charts, as I got a few minutes left here. Let me double check the time on that too while I'm looking. Oops, dollar index chart. Let me go back here and look at this time. So it was after 10:55 a.m. in the morning, and let's go back and determine where I see value at. And basically where I see value on this particular trade is, here's where our exit point is at this point at quarter, and then the bar turns over, our highway finally turns over, and we see that 13 right in this area through here. We see a physical entry roughly on this bar right here at the 1104 mark, to be technically speaking, or through here you can look at it this way too. At the 1055 it really doesn't come to fill you, but it comes back down here later, and these two bars here at the 11 o'clock mark roughly is pretty much right in this area here, shows a nice little signal. And let's just go to say that this was the entry point right here at 107.09, to take this short for a while. And let me go ahead and put on the 1R and 2R profit targets here. So I put on the 1R and the 2R profit targets, and notice that we do run the 1R target and we come right on the low here at 106.55. Now it did bounce against this 1, 2, 3, 4 times. Maybe you get filled, maybe you don't. My advice when it comes like this kind of behavior is to take what you can get. In this case, maybe moving your stop profit objective from with contracts that you have left or something, from here down to maybe the 65 mark, trailing it within 10 ticks or so. So what would have been a nice exit on this particular trade, in my humble opinion, after it reaches a 55 and doesn't fill you, is roughly in that 65 area, 66 if you want to be technically correct here. You can come out at 106.66. I don't like that number. It's too many sixes and it means too much. So I would rather come out at 106.64, 106.65, or 106.67, somewhere in that area is where I'd be looking to make an exit on this particular trade. And nice little CCI. This is Wyckoff had VSA's, Wyckoff. They're all basically the same. That's how I learned. Really good book, Day Trader's Bible. Wyckoff had a tape. Can't think of the real name. It's a reading the tape or something book like that I have in my collection as well. But make a long story short, he has two particular setups he really likes, and I've transferred that basic concept into my charts as well to handle the what's called his two really basic setups are called the thrust and the spring, as he defined it, and that's Richard Wyckoff. It was early 1900, turn of the century, and so forth. That's about it. That's all I want to talk about tonight. This is Dave Knight here at Knight Capital Management. Hope you enjoyed the free video. Thanks. Bye.